Hello, folks. Happy 4th of July. We are living in the best country in the world, at least until Texas secedes. Then Texas will be the spot. Anyway, we are going to talk today about the U.S. dollar. Now, we looked at this about a month ago, so we'll get a little bit of update on the charts, but I've been doing some thinking about the U.S. dollar and have had some ideas gel. So anyway, some of this is reiteration from a month ago. When we talk about the U.S. dollar, we're really talking about a basket of currencies. You know, there is a fiat U.S. dollar. We all walk around with them all day. You know, you pull out your wallet or your purse and, you know, there's Benjamin and there's Jackson, etc. That's the fiat U.S. dollar. But when technical analysts talk about the U.S. dollar, they're really referring to an index of the U.S. dollar, which is a basket of currencies. And here's the basket in front of us, and you can see the weighting. And notice that this is 83%. So 83% of the basket is made up of these three currencies, and that'll be relevant somewhere during this video. So when we talk about individual currencies, and in particular technical analysis of the currencies, we aren't really talking about a currency standing on its own. We talk about currency pairs. It's the US dollar versus the euro, or the euro versus the franc. The fiat currencies don't chart by themselves. They're always currency pairs. All fiat currencies they're all garbage. You know, the intrinsic value of fiat currency is zero. At this point on planet Earth, none of the fiat currencies are backed by anything other than a government's ability to tax their citizens to death. And so really, how do you compare, when we're talking about currency pairs, how do we compare one piece of garbage to another piece of garbage? You know, it's a watered up candy bar is equivalent to 3 rotten apples or 3 rotten banana peels, you know, whatever. It's all relative, and the truth is none of them have any value at all. The key idea, and this is my thinking this morning and over the last week or two, based on people I've heard talking in videos and looking at charts, the petrodollar is in the process of fading away. And so we have to understand, what is the petrodollar? It goes back to 1974 when Saudi Arabia and the United States sealed an agreement that Saudi Arabia would only sell oil in US dollars. And since that point, everything in the world basically has been priced in US dollars. Every country on the planet, if they buy oil, which most of them do, they have to first buy US dollars. Somehow they got to put their hands on US dollars so that they can turn around and buy oil, because oil's priced in the dollar. The petrodollar came about in 1974 because the world was kind of in turmoil when Nixon closed the gold window in 1971. That pretty much ended the Bretton Woods agreement, which that was the previous agreement that kind of established the value of the US dollar. Of course, it was backed by gold, or supposedly backed by gold. The 1971 event threw the economic world into turmoil. That resolved in 1974 when the petrodollar was established. Well, now I believe that we're at another major transition point in the global economic system as it relates to the US dollar and all the other fiat currencies. A big factor in that change is the China Belt and Road Initiative. One of the new data points for me in the past week is that Nigeria is currently selling oil to China for a yuan-denominated bond. And then, of course, the yuan is China's fiat currency. Nigeria, in case you don't know, they are the second largest exporter of oil in OPEC. And so, you know, you think, who cares about Nigeria? Well, we all do. second largest exporter of oil in OPEC. So big deal. This bond, this yuan-denominated bond, is directly exchangeable at the Shanghai Exchange for gold. And so Nigeria can take these Chinese bonds, go to the Shanghai Exchange, and walk away with gold. And so this is essentially oil backed by gold via the yuan-denominated bond. So again, this is a big deal, and it's a significant change to the petrodollar world that we've all been living in for decades, since 1974. Supposedly, and I've only heard this from one source, don't have anything to back it up, supposedly Saudi Arabia is talking with China about doing the same thing. Well, obviously, if Saudi Arabia starts selling oil for anything other than the US dollar, well, the petrodollar is dead or dying. And if the world no longer needs dollars to buy oil, some amount of those dollars are going to come home. And of course, home is America, where we all live. A great onrush, the massive return of dollars into America would cause hyperinflation, at least in the U.S. And so anyway, again, this is a significant transition that we appear to be in right now. My thinking, I was able to tie together some thoughts this morning. Richard Russell, rest in peace, Richard. I consider him one of my mentors. Subscribed to his newsletter for a long time till he passed away. He always talked about a synthetic short on the US dollar, and it never really made sense to me. It never really took the time to think it through. But repeatedly, he'd talk about this synthetic short on the US dollar and how if the dollar, at some point, the US dollar would become unexpectedly strong. And again, and I didn't really understand what he was talking about, but he talked about it repeatedly. I think I finally figured out this morning, we, America, have been selling short. We've been shorting the US dollar since 1974. So basically, we've been selling the US dollar to the rest of the world, shorting. That's what, when you sell something, you're selling it short. We've been shorting the US dollar since 1974. When the petrodollar dies, we're going to have to cover our shorts. And what happens in a short covering rally? Well, a short covering rally is, it's lightning fast and impulsive movement in price. Basically, a short covering rally in the US dollar would send the US dollar skyrocketing. People are talking about the US dollar possibly hitting 120. And currently it's at 103, 104, somewhere in there. We'll see the chart here in a minute. So anyway, 120 would be a big move for the US dollar. And again, Richard talked about this unexpected strength when we had to cover that synthetic short. So let's see, petrodollar dying, unexpected strength, hyperinflation. So that's key ideas about what could be going on in the current transition that I believe we're in. Now let's jump into the charts. All of the charts we're going to look at today, their monthly time frame going back to roughly 2006. Obviously, we're not 2006 in this chart, but most of the charts are going to be back to 2006 because I wanted a consistent time frame to compare. We're going to look at both sides of the currency pairs. So we'll look at the US dollar relative to the euro and the euro relative to the US dollar, so we can maybe discern looking at both sides of the equation. Here in the US dollar, we can see we're currently at 104.96. Excuse me, so almost 105. I've seen several analysts talking about the US dollar potentially topping here, And that's not what I see at all. I mean, we do have signs of topping. You know, if we look at these upper wicks on these candles, we could say, yeah, that's topping action. Well, the dollar's pushing into resistance. This is the upper median line of this Andrews pitchfork. We've also pushed through this resistance level, which, you know, is double top, triple top. But notice that we've pushed through and could be pulling back for a retest of that as support now before the dollar heads even higher. MACD in bull mode, stochastics very elevated. This is a 20-period exponential moving average. No reason for picking that particular length of a moving average, but that's what we're going to see on all of the charts. Note that price or the dollar is well above that moving average. So that's where we're at in the dollar. So first currency pair, this is USD Euro, and we're going to look at the currencies in the order that they appear in the basket. If I can see the basket again, where'd it go? There's the basket. So we're going to look at the currencies in this order. And again, the first three currencies make up 83% of the basket. And so, yeah, these are interesting to look at, the other three currencies, but keep in mind that the first three are the bulk of the basket, 83%. So here we're looking at the euro, or actually the US dollar relative to the euro. We've gone flat on this resistance level, but notice this Andrews pitchfork price, the dollar relative to the euro, has pushed above resistance at the median line and then pulled back 2 months in a row, find support on that median line, and now continuing to push higher. MACD in bull mode, stochastics very elevated. So the US dollar is strong relative to the euro. If we talk about technical uptrends, technical downtrends, we could argue that the US dollar is in a technical uptrend relative to the euro. We have a series of low, high, higher low, higher high, higher low, double top, higher high, etc. So we could argue that the dollar is in a technical uptrend relative to the euro. We could also argue that the trend has grown flat, that the trend at this point is somewhat flat to sideways, because, you know, we're not making higher highs, we're not making lower lows, we're just kind of bumping sideways in this trading range. Let's continue. So this is the opposite chart. This is the euro relative to the US dollar. We could argue that this is a technical downtrend. If we zoom in on these pitchforks, we can see that obviously downtrend, and the dollar, or excuse me, the euro relative to the dollar has pushed through the median line. Basically, it's the opposite picture, what we just looked at, the exact opposite. MACD in bear mode, energy very low. US dollar relative to the yen. Now this is more, we're going back further than 2006. We've got more data on the yen than we do in the other currencies. And the Japanese economy is really kind of our test case for fiat currencies. They've been printing currency madly for 20 years, and they're in the process of, in my opinion, they're in the process of destroying their economy, certainly destroying the yen. And so this chart is showing us the strength of the US dollar relative to the yen. Very nice head and shoulders pattern in this chart, and the target from that head and shoulders pattern is way up here. That would be a huge move in the relative value of the two currencies. We can see that MACD is in bull mode, potentially pushing up into a resistance level based on prior highs in the MACD. Obviously, MACD is not a bounded indicator, but quite often prior highs and lows will act as boundaries range boundaries for what price does. And so potentially we're reaching a level of overboughtness based on MACD. That could cause a pause or a correction in this currency pair. Energy very elevated. Opposite picture. So this is the yen relative to the US dollar. Obviously, technical downtrend, fallen off a cliff in recent months. MACD in bear mode, energy very low. Next currency pair, this is the dollar relative to the British pound. Could make the argument that we're in a technical uptrend. The trend has gone flat for the last few years, potentially breaking up through this resistance level. You know, notice how this level has stopped the last several. You know, there's several attempts to break higher that have failed, and here we are testing that level again. We also have resistance at the median line of this Andrews pitchfork. MACD in bull mode, energy very elevated. So opposite chart is the pound relative to the dollar, technical downtrend, gone flat or sideways, bumping on support. Notice that we're below the median line of this pitchfork, and so that's another level of resistance. If the pound does manage to bounce from here, it's got resistance overhead. MACD mostly in bear mode, energy very low. US dollar relative to the Canadian dollar. Richard Russell called it the loonie. I don't know if it has an official name. I call it the loonie. It's probably offensive to Canadians. I apologize if that is so. Similar to the other charts, we argue that we were in a technical uptrend, gone flat, currently headed higher based on this Andrews pitchfork. Notice that we've got a sliding parallel. And again, sliding parallel, it's just a line drawn parallel to the median lines of the Andrews pitchfork, and then we can slide it around. So I don't know if Tim Morge, Dr. Timothy Morge, rest in peace, I don't know if he came up with the term sliding parallel, but it's very apropos. It's a parallel line that we slide around the chart. So notice that this sliding parallel has been marking the upper boundary of this trading range. Let's see, MACD in bear mode, but I believe on a buy signal, yes. So potentially headed back up into bull mode, energy mid-range. Opposite chart is the loonie relative to the US dollar. We've got a shift pitchfork, and notice that this fork's been describing the price action quite well. There we find support, breakthrough. The loonie was too weak to test the median line from below, just dropped off the cliff, found a lower level of resistance than the median line. That test failed, and then the loonie dropped all the way to the lower median line before bouncing. Now we've been in this sideways range for a couple of years. That was the big plunge in March of 2020, almost made it back down to the lower median line again. Recently, we've got, what was that, late spring of 21, pushed into the median line of that fork, and again, held back by resistance and turned lower, bumping sideways to down. MACD in bull mode on a sell signal, energy mid-range. Exact opposite of the previous chart. So Swedish krona, not corona, the krona, technical uptrend, US dollar strong relative to the krona. And this is technical uptrend, no question about it, dollar pushing higher, although dealing with resistance at the median line of this Andrews pitchfork and the prior high. So multiple layers of resistance overhead. MACD in bull mode, energy very elevated. Forgot to draw the exponential moving average. There it is. The opposite chart is the opposite chart. So technical downtrend. When we looked at these charts a month ago, I was suggesting that we could see a bounce in this currency pair based on this. This is a very bullish candlestick. We call that a morning star. Very long lower wick with a very thin body is a doji. And I was suggesting that at best we would see a counter trend rally up to the median line of this, I believe it's a shift, nope, it's a modified shift fork, before the currency rolled over again and headed lower. We didn't even get that level of strength. The krona just dropped right through that support level and is continuing lower. MACD in bear mode, energy very low. This is the Swiss franc. This is the last currency pair. And again, the krona is 4.6% of the basket, I think, 4.2, and the franc is 3.6. So these last two currencies, you know, I don't want to poo-poo them like they're nothing, but they're not a significant portion of the US dollar basket. This is mostly sideways trend for 10 years now, just bumping between the upper and lower boundary of this trading range. MACD in bear mode on a buy signal, energy above mid-range and headed higher. Opposite chart, this is the franc relative to the US dollar, and nothing really to see there. It's just the opposite of the chart we looked at. So I wanted to see, could I make an objective assessment of these currency pairs and glean any information from that. And so in this table, we're looking at each of the currency pairs and then four factors: the technical uptrend, the 20-period exponential moving average, MACD in bull or bear mode, and then stochastics. And again, remember that these first three currency pairs make up 83% of the basket. So the ones that we really care about are the ones that are going to have the biggest effect on the dollar basket are the first three. And so this is US dollar strength relative to the other currencies. And the trend is upwards. The currency is above the moving average. MACD is in bull mode, and stochastics, which is my measurement of energy, is at the maximum level or higher in the case of the yen. Of course, yen's just killing itself, shooting itself in all its feet. And then the last three are more ambiguous. The excuse me, the technical trend is not as clear in the last three currencies, but again, currency is above its moving average. The US dollar relative to the currency, excuse me. MACDs are in bear mode and energy lower or at mid-range. And then this is just the opposite. So anyway, I wasn't really able to glean anything decisive out of this information. My overall assessment is, you know, where I started, I'm expecting further strength in the US dollar. I don't believe the US dollar is topping either on a technical level or on a geopolitical level. I mean, these two factors in my mind are very significant. We could be looking at the end of the petrodollar and the beginning of a new currency regime, whatever that looks like. And of course, we won't know what that looks like till, years from now. That's really all I've got for us today, folks. I'm waiting for the markets to open. There were a lot of movements in the markets last week. The precious metals obviously dropped, silver in particular. I want to see what those markets do when they open, and then I'll probably do an update on the charts that we regularly look at. So enjoy the rest of your 4th of July. Again, regardless of everything that's going on, in my opinion, we still live in the best country in the world, at least until Texas succeeds in seceding from the Union, and then Texas will be the best country in the world by far. And I'm going to leave it there. Enjoy the rest of your 4th of July, folks.